Greetings, members one and all of the Salivation Nation. It looks like we're seeing a snap in the rally in gold as of late. The gold prices are ending a bit lower today based off multiple factors, mainly the Federal Reserve. We're going to kind of explore that, see just how big of a role the Federal Reserve's decisions on rate cuts play with the gold and silver prices. So this comes to us from Market Watch. This is a little analysis on what happened to the markets today. Gold futures finished lower on Monday, following a 4-session streak of gains, pressured by uncertainty ahead of a meeting of the U.S. Federal Reserve that is expected to offer hints on the central bank's plan on interest rates. International trade clashes and a concern over a weakening global economy, however, limited losses for the Haven metal. The yellow metal for August delivery fell $1.60 or 0.1% to settle at $1,342.90 after closing Friday. Action with a weekly loss of 0.1% based off the most active contract prices. FactSet data show. Prices on Friday had climbed to as high as $1,362.20, which was the highest since April of 2018. For now, traders have been quick to sidestep and to put last week's Middle East escalation in the rearview mirror, as a significant military escalation remains unlikely, said Stephen Hines, managing partner at Vanguard Markets. Geopolitical risk in Hong Kong faded as the local government shelved the controversial extradition bill, buttressing regional risk sentiment. There was a lot of protesting going on there. And here we can see the gold moving back a bit here in this chart here. Meanwhile, ambitious U.S. rate cut prognostications have pulled back in the wake of the robust U.S. dollar retail sales print reported Friday, he said. The FOMC, which is the Federal Open Market Committee, will conclude a 2-day policy meeting on Wednesday. In economic data Monday, the New York Fed's Empire State Business Conditions Index took a sharp turn for the worse in June, falling into negative territory for the first time in more than 2 years. The Empire Manufacturing data, along with the NAHB Housing Index, both showing weakness, is significant, particularly in the sharp decrease in new orders from Empire Manufacturing. Executive Vice President Jeff Wright of Gold Mining Inc. all point to decreased second quarter GDP, which could dovetail into more significant problems but he doesn't think it will trigger recession. The FOMC will most likely not lower interest rates this week, but will pave the way with a change in language in their statement for a rate decrease in July, along with more speculation going forward. And if we see that rate decrease, then there's some worry there about economic data where things will go, and that could cause prices to go up. But I think their softening of their action there is part of what's causing the price to go down. Some commodity strategists say the precious metals could be facing resistance from bearish traders who think prices have climbed too briskly, and the metal also is encountering a price point that has failed to climb above since late June of 2016, when Britain voted to exit from the European Union, jolting global markets. In any case, a jump seen in the final part of last week could represent an important test to the key resistance level of $1,350 or to $1,370 in an area which has always stopped the recovery of bullion in the last 4 years. So it's never really tested above that for quite a while. Starting from in summer 2016, just after the Brexit vote, when the yellow metal stopped its rally in this area, which was just slightly above $1,374. Wrote Carlo Alberto de Casa, chief analyst at Active Trades, in a daily research note. There's where your resistance is, folks, in that area for gold. Once it breaks through, that's where we could see some of the stuff that I talked about in my prior video really lead us in that direction. And I believe that probably it's going to take not only the Federal Reserve and what it does, especially if it lowers rates in July, but let's say that happens and something happens with Iran or with Brexit or news that occurs in some global geopolitical situation, then we could see those numbers start to be tested upwards. In other words, we could start to see um, multiple factors come into play that could get people worried, that could bring those prices up. And silver, I think, will follow soon after. Maybe not to the level that gold would, but we'll see. Moving and continuing on here, the Office of the U.S. Trade Representative was due to open 7 days of public hearings on the Trump administration proposal to raise a 25% levy on $300 billion of Chinese exports, including consumer goods such as mobile phones and laptops. Worry about the impact of U.S.-led tariff battle have helped push prices for precious metals, which tend to rise in times of economic uncertainty, to new highs before values pull back to the last week's trade. Another metals trading, July silver added 2.6 cents or 0.2% at $14.82 an ounce after ending Friday's trade with 1.5% weekly loss. July copper settled at $2.64 or 65 cents a pound, up 0.7%. July platinum shed 1.3% to $7.94, below the $800 level. We're going to take a look at these prices in a moment, while palladium dropped to $1,455 an ounce. So it's the markets are reacting here, and we'll see how this all plays out for sure. Let's see here. So let's get to the prices of precious metals we see from Kitco here. Gold is down $2.10 at $13.40, so down just a little bit. Not a whole lot of movement here. Silver is at $14.92. It's down 3 cents. Not a whole lot of movement there either, but it's interesting how it's flirting with that $15 level again. So we could see it. I used to think that $15 was kind of the hard floor, and then we were probably there. But at this day, and what's going on here, especially this summer, it's almost impossible to predict silver at this point, because it stayed way below 15 or below 15 enough for long enough that's the next resistance level. We'll see where it plays out from here. But I think that as the year goes on, we can still possibly see it dip back into the 14s if it goes into the $15 range again. Same thing with platinum. Platinum, $800. I've never predicted this, but it certainly is a floor or a level, a resistance level, a psychological level to go above, and now it's dipped back below that again. In fact, it was the second biggest mover downwards of the metals here. And palladium it fell pretty sharply here, $13, 0.9%. So just second behind platinum in terms of its fall, but still way above there. And look at rhodium, folks. Rhodium fell $120 to $3,330. That was the biggest mover of all the metals here. Don't know what's going on with the rhodium. Rhodium is kind of a mystery metal in terms of why it moves, and hard to really analyze it, but it is a very speculative metal, but it took a pretty big hit here. 3%, the biggest of all the precious metals there. Very good. So there you have it. It'll be interesting to see what tomorrow brings. And I'm curious to see how, with the Fed giving hints, now Jerome Powell, no matter what happens, even if they may take no action, he's going to hold a presser. That's their change in their policy. So if that's going to be happening now, it makes you wonder when they're going to be kind of showing their hand, how baked in some of these prices are leading up to the meeting up to where things are. I've heard kind of back and forth as to what they're going to do in July. So will this meeting here on Wednesday, finding out if there's 2-day FOMC meeting, what will that tell us about what the markets will bring, or what the Federal Reserve is going to do with the interest rates? And if they do lower them a quarter point, will the price continue to stay baked in and not really move a whole lot? There's not been a whole lot of movement today in terms of gold and silver, in terms of nominal values, real values, and even percentage-wise, very little movement, but enough to kind of pull back just enough to and make people kind of wonder and see what's going on here. So maybe this is part of the baking in, and of course, obviously, some of the other things that, especially with trade, there's still a lot of uncertainty there. And I think really We're going to be nervous. The markets are going to be nervous until things play out. But also keep in mind that people want things to do well. So if something's not in the news or not being politicized, more than likely markets will recover to some point. It's pretty resilient, and I think there's a lot of psychology behind that. So post your thoughts below. Would like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.